Good morning, folks, and welcome back to Almus Market Mornings. Sometimes the range is important than just looking at the median. Yesterday's speeches by Fed members highlighted the kind of diverse views held within the Fed. There was a speech by Fed member Alberto Musalem who mentioned that there is limited room for rate cuts amid elevated inflation. And then by Stephen Miran, in his speech for the first time as Fed governor, laid out his arguments for aggressively lowering interest rates, both of which are quite different thought processes within the Fed. On the markets front, there is renewed dollar weakness. Euro has reclaimed 1.18 and gold trades at new all-time highs. Good morning, JK. What are you making out of this range of views within the Fed and the recent bout of dollar weakness?
Good morning, Swaraj. First on to the Fed speakers. At least yesterday and today, not much data is scheduled. So market is actually watching out for more statements from Fed members, and of course, waiting for data later in the week. There were quite a few speakers yesterday, and most of them were actually expressing again a cautious approach to monetary policy and also skeptical about the inflation aspect. However, Stephen Miran, not surprisingly, was the one who stood out. He said that Fed rate was at least 200 basis points high and outlined that there are several tools that Fed currently utilizes in its decision as being wrong and out of date. So that is not surprising. But market, is just digesting these comments, and there will be more comments today as well. Later in the week, we'll have GDP data from US and the all important core PCE. We'll also have the flash numbers on the manufacturing and services PMIs from various regions. In the absence of any major trigger, the existing trends have continued. Uh, the dollar has been in a range. Yes, we did see glimpse of a rally in the dollar after FOMC meeting last week. It was more like a profit taking on the short positions, and then of course with the 1.17 holding on the euro and also 98 not being broken on the dollar index, there has been more selling. There's no clear indication to me that the dollar is breaking down once again immediately. In fact, if you look at it, dollar has fallen so much during the year that its inability to break down further, despite these several attempts that we have been seeing. Probably one more attempt is now on the way. That could actually lead to sharper retracement for the dollar. So I'm not in favor of seeing a fresh breakdown in the dollar, and there are no triggers as well because monetary policy is still on the watch. Now, yesterday we saw all the 3 years stock indices record at all-time high, and that was for a third straight session. But let me recall that in the beginning of the month, when I was updating, I had said that September has historically been one of the weakest months for global equities, including US. And the data showed since 1945, September worst performing month for S&P 500 with an average return of minus 0.7%. And what we have seen this month has been completely negation of the history. And what we have seen is a Dow up 1.88%, S&P 3.6%, Nasdaq 6.21%. Even Japan has been 6.5% higher. Global equity index has been 3.58%. Even India, which has been a kind of underperformer, is up 3.05%. Now, that means this kind of rally in the stocks was last seen 11 years back in 2014. And so I think history, at least with still one more week to go, so far history has been proved wrong. It's not only stocks. I think it's kind of all on rally that we are seeing. 10-year is also down by 7 basis points during this month. This means the bonds have also rallied. Gold up 8.7%, silver up almost 11%. So whatever the concerns the governments, economies might be expressing over the trade, tariffs, and US policies, investors have been enjoying very good return this month, and that's very highly remarkable. Although I must say, particularly in the stocks, despite stunning rallies, quite a few market experts and veterans are remaining cautious because going by many historical parameters is extremely overvalued. But nobody wants to, take a stance against the existing trend. That's why the market keeps going after small pauses. So let's see whether these things reverse in the remaining part of the month to prove history right. I doubt very much. At least there are no indications. As far as India is concerned, the reactions, as hinted yesterday by me for the H1B new regulations, was quite subdued. Rupee, yes, Rupee weakened to again 88.30 after starting at 88.15, but it was more on account of the outflow, which market talked about from the FTSE rebalancing side. Of course, the moment you have some buyer, a market doesn't get too many supplies, and that's the reason why it generally goes in that side. But importantly, the 88.30 resistance has held. On the stock market, we have had a 0.5%, a little over 0.5% loss. But again, that is not much, considering that the outlook for the IT sector in India has been somewhat clouded now after the new regulations on H1B visas and all that. So I think these are now quite normal moments that we have seen. There's no extraordinary moment that was seen on account of the new announcement by the US government. In fact, news says that Commerce Minister Piyush Goyal is on a visit to the US in a bid to calm the tensions between the two countries, and is likely to meet the U.S. trade representatives, this week in an effort to accelerate trade talks between the two countries. So, all said, nothing much has changed as far as India is concerned. We still, as I said, the impact of the new regulations would be only on FY27, not on FY26. So, I think market will now look more towards a trade agreement, and the discussions which may be on the way in the coming months, and dollar index is still in a range. Not much, at least now, as a trigger. Yes, definitely, we are going to look ahead to the week's data before we get a new trend. Yes, as I said, gold, no stopping gold. Awesome rally, and I think again, I think it's kind of FOMO is taking over, the fear of missing out. That's why you see the market is just buying at any new high also vigorously. So I think this trend is too strong, but one should be cautious that the market is definitely on the overbought side. Thank you.
Thank you, JK. And I think, as we discussed, wide range of views within the Fed, most expressing caution, except for Stephen Miran, who expressed inclination to further cuts. I think, JK, if I'm not wrong, even Chair Powell will be speaking today, right?
Yes, he is scheduled to speak today.
Yeah, he's scheduled to speak today. So, of course, it's just data light today and tomorrow, and then later during the week, we get some more data on PCE, GDP from the US. Dollar has been in the range, slightly on the weaker side within the range. Equities are doing extremely well all across the world. As JK mentioned, it's very unlike September, because September historically has been a very bad month. But this year, we are seeing a stupendous rally in stocks. Gold and silver rally also continues. When it comes to the domestic market, reactions to H1B regulation was subdued. Rupee weakened slightly to 88.30 due to some outflows, but this resistance was well held. Stock market was also only slightly subdued, almost 0.5% down, which is a normal set of movements. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates.